Good evening, ladies and gentlemen. I'm Sonal Khetipal, editor for SMEs at Financial Express Online. I would like to thank you all for taking time out today to attend this webinar. Given we are amidst the second wave of the pandemic and a lot of us are suffering from it or taking care of loved ones who have tested positive, COVID has impacted us, but it has also impacted the country's 6.3 crore MSMEs in the worst possible way. One of their biggest growth challenges, the working capital crunch due to payment delays, has only become more severe. As it is, MSMEs dues would get cleared in 45 to 90 days, and now it has got extended beyond 3 months. This delay has led to major liquidity crunch in their operations. To improve the MSME's cash flow, Reserve Bank of India had set up the electronic platform trade receivables discounting system called TReDS to facilitate invoice financing through banks, NBFCs, and other financial institutions. We are here today to discuss if TReDS has really solved the problem of liquidity crunch faced by MSMEs. After so many years, what are the operational challenges that remain and how can they be solved? And most importantly, if TReDS platform has been able to reach out to MSMEs across multiple sectors and has focused, or it has focused on the top few. To share insights, we have a panel of eminent speakers, each of whom brings in a different stakeholder perspective on the TReDS ecosystem. I shall name them and introduce them to you in alphabetical order. Mr. Chetan Khandelwal, Head, Banking and Cash Management, Jindal Stainless. Mr. Ketan Gaikwad, MD and CEO at Receivables Exchange of India. Mr. R. Narayanan, Founder and CEO at Power to SME and President, FICCI CMSME. Mr. Rajat Mehra, Partner at Rajat Chemical Industry and member of CII National MSME Council. And Mr. Sangram Singh, Executive Vice President and Head, Commercial Banking Coverage Group, Axis Bank. We shall now begin with introductory remarks from each of the speakers about their experience of the TReDS platform. Mr. Gaikwad, since you are representing the TReDS platform, we shall begin with you first. Over to you, sir.
Thank you, Sonal, and thank you to Financial Express for holding such a valuable webinar. So let me just talk about myself first. I am Ketan Gaikwad here. I'm the MD and CEO of RXIL, Receivables Exchange India Limited, which is a joint venture of SIDBI and NSE. This is the first TReDS platform in India. And so I've been a banker for the last 28 years, and I've joined RXIL in April 2019. And for the last 2 years, I've been with them. So that's it. I think you want me to talk about TReDS? I think we will take it after the introduction.
Sure. Mr. Chetan, do you want to go next?
Hi, good afternoon, everyone. First of all, I would like to thank Sonal and Financial Express for arranging this webinar and giving us an opportunity to share our thoughts. Hi, I'm Chetan Khandelwal, heading the Banking and Treasury of Jindal Stainless Group. We are the only integrated stainless steel player in the country, and I'm associated with the Jindal Group now for almost 13 years. Thank you.
Mr. Singh, you might want to go first because so we have the three, different stakeholders' perspective before we actually go to the SMB, ex-speakers here for whom actually the TReDS platform is for.
Yeah, sure. Thank you. Good evening. Really happy to be here. My name is Sangram. I run the commercial banking group within Axis Bank, which looks at the banking needs of the small and medium enterprise customers of ours. And I'm really happy, Sonal, that you and Financial Express could arrange this thing. I think it's timely, it's useful, and I think as people will discuss during the course of our conversation, it is something that requires even more focus to drive it.
Great. Mr. Narayan, you want to go next?
So I'm Narayan. Been an entrepreneur for the last 23, 24 years of my life. I run two companies. One is a services company called Danair, and the other is an internet platform called Power to SME, where we're working with the SMEs to help them with their raw material aggregation needs, aggregating the raw materials for them. And of course, we also provide working capital to these people. Additionally, I'm also the president at FICCI CMSME, trying to work with the MSME groups and trying to work with them on policy, clarifications on government, clarifications on the various schemes that the government provides, etc. So that's about it as my background.
Thank you, sir. Mr. Mehra, do you want to go next?
Thank you, Sonal, and thank you, Financial Express, for creating this platform to discuss TReDS and trade-related issues. It's a very wonderful subject to discuss at the moment, and something that would touch upon with almost with every MSME. And I am Rajat Mehra. I am an entrepreneur. Have a manufacturing unit in Lucknow, and have been in business for the last 3.5 decades. And I'm also on the National Council of MSME, CIA, National MSME Council, and I'm Vice President of Indian Industries Association as well. And thank you for giving me an opportunity to be part of this esteemed panel. And it would be absolute wonderful opportunity for me to share my views as well here. Thank you.
Great. So all of you all represent this different stakeholder position in this entire big TReDS ecosystem. So maybe we can start with Mr. Gaikwad, who first shares his perspective and sets the context, on where we are when it comes to TReDS. And then I would like to hear everyone's perspective on, what are your challenges, what is your perception of the platform? And there's a lot of misconceptions I've been hearing from, different stakeholders. So what is it that you hear? And so we can all clarify where we are on the system right now.
So thanks, Sonal, and thank you. It's such a wonderful opportunity that many people are there, and especially representing the associations like FICCI and CII. So it's heartening to know that. And so let me just talk about TReDS and why the TReDS came into being. So look, in India we talk about 6.5 crores MSMEs giving 11 crores jobs, and the 29% of contribution to Indian economy. So the government is looking at making this economy a $5 trillion economy. So the perspective is very clear. The growth is going to come from MSMEs alone, and the perspective is clear that the MSME should contribute 50% of India's GDP over here in the next 5 years. So that being the case, and they should add 5 crore jobs over here. So then, if they are so important, the MSMEs are so important, what is it happening? What is happening that the MSMEs are facing slow death? They're getting choked by dues. There was an article which came in last year. In one of the articles, it was very clearly said that the MSMEs are choking in their own dues, because the dues which they are supposed to receive payment from large buyers and the corporates, they do not receive it on time, and that is leading to untimely death of these customers, these MSMEs. So the government started thinking about it, and in 2016, the TReDS guidelines came into being. So SIDBI and NSE joined hands together. They started a platform called as RXIL, Receivables Exchange India Limited, and we were the first platform to go live. So what is the perspective over here? That the delayed payment for the MSME should get handled. The answers to the delayed payment issue. So in 2018, the government during an outreach program became very clear that this platform is going to help the economy. So then they made it clear that the MSME, the government PSUs have to join this platform. In 2018 November outreach program, Mr. Modi decided that all the corporates above 500 crores turnover have to mandatorily join this program, the platform. But it has not taken off. So, but if you look at the platform as such, the platform has 3 participants. So I'm just assuming that I'll just take the entire team through what exactly is TReDS platform. So you have the MSMEs as the seller, you have the buyer, and you have the financiers on the platform. So the MSME seller, once he's supplied the goods, he comes on the platform, he loads his invoices. Assuming that these 3 parties have already registered on the platform, that the buyer has to come and accept that invoices. And once the invoices are accepted, then it becomes available to the financier to go and finance for it. And there is a competitive bidding which happens over here. And why it is necessary for the MSME or for the buyer to accept it is because this platform ensures that the payment which the MSME receives is without recourse. And the risk is completely predicated not on the MSME, but it's predicated on the buyer risk. So the buyer risk determines the pricing which is there for the platform for that particular invoice. And that's the most I would say the amazing concept which the TReDS has, that anywhere in any part of the world you have a program for MSMEs which runs a program for non-recourse financing for MSMEs. So this is the concept where the MSMEs comes, upload the invoices, the financiers look at the invoices. Once the buyer has accepted it, the bidding happens, and once the bidding happens, the whoever bearing the cost, either the beneficiary, either the MSME or the buyer, then depending on the after they have accepted it, then the payment happens next day. So that it's such a beautiful and a digital platform which is there. And over the last 3 years, I would say that there are three exchanges in India. One is ours, our Receivables Exchange India Limited. There is Invoice Smart, which is the joint venture between Axis Bank and M Junction, and the third exchange is M1 Exchange, which is the Mind Solutions promoted company in Gurgaon. So these are the three exchanges. Between the three exchanges, it will be you would be it will be very good to know that the three exchanges have done platform discounting worth around 35,000 crores and helping 20,000 MSMEs over here. So that is the growth area. In fact, in the last 1 year, between the three platforms, we have done around 17 to 18,000 crores altogether. So that being the case, it is very much necessary and the need of the hour that MSMEs should get registered on the platform. The corporate should get registered on the platform, and they should start transacting. And that is what I would say, that the need of the hour is the MSMEs to get registered, and its need of the hour is that the media and everyone talks about TReDS altogether. And it's very important that this particular message spreads across to the entire community, MSME community.
35,000 worth crore of bills being discounted is a phenomenal number. But let's also hear from our SMB speakers, Mr. Narayan and Mr. Mehra, on how, what they think, how beautiful this platform is. Mr. Narayan?
I think the TReDS platform is a blessing in disguise. It's not even a blessing in disguise, it's a blessing, per se, kind of stuff, right? I mean, conceptually, it's one of the best things that happened. And, infrastructurally, if you look at it, when this country has two platforms like the GST platform and the TReDS platform, if we can marry these two platforms, there is not going to be even one penny of working capital requirement in the economy, right? So, I mean, if you look at it conceptually, if GSTN goes and publishes all the invoices automatically on TReDS, and buyer acceptance becomes automatic instead of waiting for people, then what you're actually seeing is, the debt requirement of this country comes down to almost 60 to 65%, which is actually the working capital requirement in the country. And the beauty of the whole system is that the banks and other people, instead of having to depend on, the weaker balance sheets of an SME, would actually start depending on the stronger balance sheets of large buyers. And this NPA as a concept will actually disappear from the system, kind of stuff. So I'm a great admirer of this platform. And incidentally, of all the three people sitting here, Mr. Gaikwad, we are a user of TReDS and we love it. Mr. Sangram Singh, we use your platform. You're one of our bankers. And Chetan, at JSW, you're one of my largest suppliers. So I have pretty well linked with the platform. So I have, but the typical bane of India, implementation can be far, far better. And those are some of the things I'd like to focus on. But however, I'd like Mr. Mehra to take over.
Thank you, Sonal, and thank you, Mr. Narayan. Mr. Gaikwad very nicely and elaborately articulated the entire concept of this TReDS platform. And just taking forward a couple of figures that he's just now shared. Number one, that there are about 6.5 crore MSMEs in the country, which basically is the target group. That's excellent. So that first thing is that in the perspective of both the TReDS platforms as well as government, it's the entire horizon and not just the limited number of people. And number two, 35,000 crore of payment has been handled. But then also one thing that would be of interest, Mr. Gaikwad, would be that this 35,000 crore, I think, is the aggregate amount of payment that perhaps you would be referring to. And for that, the timeline would also be a part in that for what period of time this 35,000 crore of transaction has been handled. Now, also one other thing that I could pick up there is that you said something about the discounting system, that this basically is a bidding process, electronic bidding process, where depending on the credibility of the MSME, the bidder would actually bid and then take over the liability, and then the payment would be received by the buyer of that bill from the customer of the MSME. So that means discounting that is going to take place would be a function of the credibility or the rating of MSME, and this discounting becomes the cost for MSME. Now, this is where the crux lies, because at the end of the day, every business would calculate do the cost benefit analysis, that what would be the risk reward ratio also. Now, I would just like to put things in perspective, that in India we have two universes in procurement system: the private procurement and the public sector procurement. Private procurement system behaves very differently vis-a-vis public sector procurement. Private sector procurement strongly goes by the trust that is established, and we rarely see people breaking that trust. Mostly there are definitely defaults, and for this default only, government has time to time, it has kept on coming up with one or the other legal changes in legal framework. For example, in 2000 there was some amendment in MSME Act, and Facilitation Council was established. Then recently, I think somewhere around 2010, Reserve Bank of India introduced another requirement, that every company will have to file a quarterly return regarding the outstanding payments of MSMEs. This one change made a big difference, and suddenly all companies started taking this thing very seriously, and they ensured, the good companies at least, they ensured that no MSME had an outstanding, at least on the day when the return was to be filed with the RBI. So, and then Facilitation Council also, we had a very interesting observation, that the private procurement companies, when they were taken, if they defaulted and they were taken to Facilitation Council, they very quickly, in majority of the cases, and when I say majority, means over 95% settled their dues immediately on reference to the council. Hardly many believed in taking litigation forward. But when it comes to public sector procurement universe, it's altogether a very different, it's almost 180 degrees. As a banker, you would, I think, recall that there were times about more than 2 decades back when we used to do businesses with public sector companies or government departments on document through bank basis. It is supposed to be very safe and secure system of payment, but we had some of the very bad experiences there. Things got manipulated at that time also. Then in Facilitation Council also, we had a very strange kind of experience, that public sector and government procure system had a very different take, and those who referred their cases to Facilitation Council have been struggling, especially with government supplies. Now this TReDS platform has come up, and the success of TReDS would be majorly and entirely based on the public sector procurement system, which you very correctly mentioned in your opening address, that Government of India had actually mandated that all public sector companies should come on TReDS platform, register themselves, and then MSMEs would also get registered, and then this would take place. Here there is a very fair cost benefit and risk reward ratio benefit here, that public sector undertakings and government procure system invariably stretches their payment lines, invariably. So we ourselves witness cases where these payments get delayed to the extent of year and more, 365 days and more. That's a huge period.
Mr. Gaikwad, do you want to come in here and give your perspective and comments on what
Sonal,
Mr.
I want to
Mehra
add
is
one
saying?
thing before
He wants to complete it. Let him complete it. Then
I want to add one more thing. So what happens is, that in public sector procurement system, there are again three subsets: the central public sector undertakings, the state public sector undertakings, the central and state government departments. Now, what is happening is central PSUs are encouraged by central government to actually get onto TReDS platform. Whereas when, as you said, that Honorable Prime Minister actually mandated that all companies above 500 crores must get on TReDS platform. So private sector, they may get onto that platform, but I would suspect that there would be very limited success, because usually private buyers and suppliers have clean credit system as long as they stick to their payment lines. It's the government side. Now in government universe also, the central and state government departments and state public sector undertakings, I don't think, to the best of my knowledge, they are not part of TReDS platform. And even among central PSUs, there are three things happening. One, either they are not actually getting onto a TReDS platform very enthusiastically, and if they are happening, different PSUs are getting onto different platforms. So what MSMEs are having to do is they have to get themselves registered on all three platforms. And then third thing that they face, MSMEs, is that these PSUs are not forthcoming in acknowledging the bill. Once they file the bills, the buyer does not acknowledge them. It's a typical, yet another typical method of just circumventing or delaying acceptance. So the more they delay, the more things stretch and the timelines go, because the day they actually accept, that will be the day when the bidder's timeline starts. If they don't accept, so bidding process itself cannot start. So it's all, this is a typical approach of manipulating and circumventing the system and subverting it. This is where Mr. Gaikwad, we would like to listen to Mr. Gaikwad. How do we address these issues?
Yeah, so very big prologue. So let me just see whether I can address it all. First of all, let me tell you one thing. The TReDS platform, what I clearly said it, that the TReDS platform does not depend on the credit rating on the MSME. In case if you feel that that's the case, it's not that case. It completely is predicated on the buyer's rating. So it's a without recourse program for the MSME. So MSME's rating does not have to do anything with the pricing which he gets it. So there is a possibility that MSME, when he comes for a bill discounting program, when he goes for let's say he opens up a shop or he opens up a workshop, then when he goes to his bank, he takes a facility. He takes a facility by pledging his warehouse or whatever it is, and he gets his facility. That facility will be a fully collateralized facility, which is given to him at 10 to 12%. I think it's still lesser. It can be more also. So when it's a small corporate, it is still lesser. It's still higher. So on this platform, when you're supplying to the large corporate or the government department or the PSU, the platform prices the particular discounting on the risk of the corporate and not on the MSME. So that is the first thing. Second thing is what you have clearly said is, look there, and let me dispel another notion also which you have. Among the CPSEs, the government is very clear that the CPSEs have to come on the platform. It's very clear. They have told very clearly, and now there is a directive also that the state governments also have to come. In fact, they are writing to the state governments also that you have to come with their state enterprises also to the platform. See, look, there is no will from these guys to come in, because it's very clear that they do not want the transparency on the platform. And if I were to just quote the last year's figures, in 2019, there was a query from the very high office in India, and very clearly it was asked that how much are the TReDS platform doing, and how many CPSEs are there. I'm talking only about CPSEs. State PSUs are not there at all. So when you talk about the CPSUs, out of 256 CPSEs registered in India, maybe 10 to 15 are defunct or they're not working, but otherwise 156 CPSUs have registered. How many are doing the transactions? Only 4 CPSUs have done transactions more than 50 crores. Four CPSUs have done transactions up to 10 crores, and 4 transactions, four CPSUs have done transactions between 10 to 25 crores and all that. So that's the sad part, and we've given that data clearly to the government and the ministry also very clearly. So clearly there is no willpower. They want to circumvent the situation over here, that they do not want to come on the platform because there is a transparency involved. And how do you make some more money out of this billing system which happens? So they don't want it, because at the end of the day, when the bill comes on the platform, as they accept it, then it's an obligation which is created for them to make the payment on the due date, which they do not want. So that is the clear thing over here, that and that is what the government is working towards it. The ministry is also working towards it, very clearly saying that if you are procuring, if the government is, and our thought process is very clear to the ministry also, and they are also working towards it, that first of all they want to make it compulsory for the corporates above 250 crores to come on the platform. And if the and at the same time, the CPSUs also should come on the platform, and they should start transacting. They are not transacting at all. Leaving 4-5 CPSUs, they are not transacting at all. Let me be very clear. It's only the oil companies which are there, and one or two very high, very CSR oriented companies, or very good companies are coming on the platform and realizing the benefit. And there is an issue to an extent where the CPSUs are penalizing the supplier also if they insist on passing their invoices to the TReDS platform. So we have made it very clear. We have told the authorities also that this is what the case. So it is very much a requirement from the government's push and the will that they have to start. And I made it very clear to, in fact, we are telling them that unless you make it compulsory, these things are not going to happen. Right. And if you look at the performance of the CPI, if you look at the performance of the TReDS platform, it's completely based on the performance of the corporates. When I talk about the PSUs, there are not many PSUs at all. I would not say it's not even 35,000 crores per se. I don't think even 10% has been transacted by the PSUs at all. So it's the vice versa thing. It's not about corporates having a faith system over here, because corporates also play with the MSMEs payments. They also delay the payments. Very clearly, they delay the payments because they're using the MSMEs like a bank. They decide when the MSME will supply, and they decide when they will make the payment to the bank. If the MSME delays the goods by even 1 day, they will penalize him with liquidated damages. But at the same time, if they will continuously, or they will invariably delay the payment to the corporate, to the MSMEs. There are certain corporates which have very stringent rules about making the payment to the MSMEs on time and whenever they're contracted for. Otherwise, there are corporates who play with the MSMEs not making the payments on time. And we have seen during the COVID scenario, there was a need by the corporates that they want to come on the platform and do the discounting on the platform. So that's very clear. And that's why we have seen an increase in the volumes in the last COVID period, that the corporates who first initially thought that we will not make the payments, you would have remember during the COVID time, the first initial announcements were large corporates came across and said, we are not going to make payments to our suppliers till the situation improves. But then suddenly they have realized that it is very important for them to keep the supply chains active. And when they want to keep active supply chains active, they have to take care of even the smallest component or the weakest link in the platform, in the supply chain ecosystem. So we see that the corporates are realizing that the great importance of the TReDS platform, because look, when you try to do supply chain financing, if any corporate tries to do a private corporate chain, or private corporate tries to do supply chain financing, they're normally associated with one or two banks, and they have a cartel over there where they discuss between the two banks will discuss, or two or three banks which are doing the supplier financing for that large corporate or any corporate. They decide the pricing. And what pricing they should be doing the transactions. But when you come to the TReDS platform, you have a open auction mechanism where the banks just look at the corporate on the other side and say, okay, fine, this is the case, I can bid it at so rate. So here is an advantage of the platform, that the MSME gets an immediate cash without recourse. Another risk of the corporate in the sense, at the rate of the corporate which the corporate gets. Sometimes the difference between the MSME pricing and the pricing on the TReDS is more than 5% also. So there's a huge benefit over there. The corporates also realize the difference of what they do in a normal supplier financing and what they get it on the platform, because we have seen the difference is sometimes at around 100 to 125 to 150 basis points. So they have also realized it, that if they come on the platform and they start doing the transactions, it's a price discovery mechanism. Come on, that's a market rate what they're going to get it. So tomorrow they might be at the mercy of one or two banks, but tomorrow when you come on the platform, the market determines the rate at what the discounting can happen. And banks are very competitively bidding for this such assets, because they want these good assets to be there with them, and it's priority sector lending for the banks also. So all in all, there has to be a will from the government, which I feel the government is working on it deliberately, and there are deliberations on it time and again with various ministries, and they're seeing how they can, get the integration, how they can get the corporates, especially the central PSUs to come on the platform and start transacting. I trust, I think I would have answered one or two questions of yours.
Excellent, Mr. Gaikwad. Excellent. It's been, it's a two-way interaction, and there are things that you have just not confirmed. There's so many apprehensions that you very correctly confirmed, and at the same time, what you just now spoke about, the private sector corporates actually utilizing TReDS platform would also come as a big eye opener for MSMEs, because I have been getting lots of feedbacks from our MSME members and from associations who keep on, asking this question, that how should we actually ensure that the private corporate sector actually behaves in a disciplined manner for payment realization. And we really were at our wits' ends how exactly.
In fact, just to add over here, the MCA, the ROCs are actually been given the task of following up with each corporate to understand whether they have registered on the platform, and if they have registered, how much business are they doing, and if they have not registered, why they have not registered, and if they have to register, when will they register. So all these questions, in fact, I have seen many times video conferencing happening before the COVID scenario. I have seen invites going to the corporates asking that, you come on this particular meeting and tell us why you have not registered on the platform. Plus, the MSME secretary in the month of August has written to at least 5,000 corporates all across India, asking them to come on the platform, start transacting, and very importantly saying that, these issues are there for the delayed payments of MSMEs, and we request you to come on the platform, discover the prices, start transacting on the platform. So this is kind of mechanism, or this is the kind of, the output which is going from the government, which is
so
here I would like to actually listen from Mr. Khandelwal to share the corporate's perspective, since we have been really beating them. So let's hear his perspective now.
So thank you, Sonal. See, no doubt that Mr. Gaikwad has mentioned that TReDS have the following these highlights: online marketplace, single product platform, and the transparent bidding mechanism. So basically, all multiple banks on one platform, you get the advantage of the competition. This is also regulated by RBI, but still challenges have been noticed. So see, as far as general stainless is considered, we have registered ourselves on TReDS platform as per RBI requirement, and have also started doing transactions on the same. However, the experience of doing the transaction at the platform is not encouraging, to be honest, as we have noticed challenges from both MSME suppliers and the financial side. And further, there are some constraints for the corporates as well. So would be happy to share my thoughts on each of the parties involved. And especially when we talk about MSME, it has been seen that there is a reluctance or apprehension in the MSME supplier to get registered on the platform and do the transactions there. This is what we have feel. The apprehension is on account of few things, like MSME supplier required to execute an agreement to register on the platform, share their KYC documents, some indemnity requirements, some covenants, compliances, etc. See, let's understand that in the current system, there is no requirements to be done, as today they are getting payments under LC, as we procure most of our RMs under LC. So they get payment on time. So there's a big change required, which is required to convince MSME suppliers, especially the medium-sized one. Apprehensions also include, see, what type of charges will be deducted. Also, although it is a non-recourse facility, but what will happen in case buyers do not pay the amount on due date? And Mr. Mehra was also mentioning about that, whether it will affect on their credit profile as well. So these are the questions which comes on the MSME mindset. So I believe two important things which needs to be done on this part. One is the spreading awareness to them about the benefits and the process of the system. And secondly, the compulsory registration of the MSME supplier. Should be there, like the corporates have been asked. See, if we see about the, this is about the MSME. If we talk about the financing sides, yes, there are things. I think most of the corporate, especially when we talk about us, face challenges with respect to availability of limit and pricing of the limit on the platform. although the pricing of at platform is being discovered, as Mr. Gaikwad said, through bidding process, so you may get advantage of competition, but at the same time, it is higher as compared to pricing of other which is available in the current system. And when we talk about the availability of limits on the platform, what we have noticed generally is that no banks are mandatorily required to provide limits on the platform. I think when we, after this, when I would request Mr. Sangram Singh to give a feedback on this. So have noticed that banks are more comfortable in providing the bilateral limits rather than funding on platform, despite the fact that the funding under this platform is covered under priority sector lending. I'm honest to be, I'm very surprised to see this, why this is not happening. There are cases where particular lender is giving exposure under normal working capital assessment, but not ready to finance on platform. Maybe a rating an issue, security structure may be an issue, because otherwise under normal working capital assessment, they get the security. Process of sanctioning of limit also I feel is very extensive, equivalent to credit risk assessment. So despite that, it is a rating link. And the last, I feel the one most important point is that there's no reporting structure which is there as of now for the banks to the regulator, wherein they have to advise to the regulator that how much business they have done on the platform as compared to their direct business, bilateral business. So these are the things which are there, I believe, from the MSME side as well as the financing side, which requires, these are challenges which has been faced.
So here we have a very long list of questions from Mr. Khandelwal. Mr. Singh, would you like to address those concerns?
Yeah, sure, absolutely. But to begin with, just a small preamble. I think most players in the market do think it's been a wonderful idea. At Axis Bank, we certainly thought so. That's why we went ahead with it and we participated as one of the investors on the platform. On the MSME side, when we deal with our customers, and of course, as bankers, we're not just lending to MSMEs, we are doing a whole lot of things with them, right? Deposits and trade and other aspects. But this is known, right? Amongst the challenges that MSMEs face, which is could be access to markets, could be access to capital, liquidity has always been one of the main concerns. And anything that sort of eases liquidity, simplifies it, is something that's good for the MSME, but it's also good for anyone who's lending to the MSME, because that's what you're lending on, right? The kind of liquidity they have. So, look, I think I just want to sort of remind from one of the initial points that Ketan made, that sure, there is a long way to go before on TReDS. But at the same time, you know, if the platforms have discounted 70, 80,000 sneeze at either, it is still a small thing compared to the overall flow in the economy. But it is not like a proof of concept kind of thing that we are discussing. We are talking about thousands of MSMEs who have come on the platform, 35,000 crores done in a year, or 70, 80,000 crores done over the last few years, which means that there are people who found value, and all people in the value chain, right? There are MSMEs who found value, there are buyers who found value, and the financiers who found value. Now, there is, of course, this entire thing about driving awareness, and you know, there is this famous point that until the point of inflection, you know, any two lines, you can't tell the difference between one which is going to become exponential and one which is going to become linear. So maybe hopefully it's around the corner where the adoption can clearly be driven and a lot more people come onto the platform. So I think the awareness point is something that you keep hearing again and again, and I think a lot more can be done there, not just in this forum, but even otherwise when we talk to our clients who are MSMEs and we talk to them about TReDS platform. It is not that it's a household word. Not everyone's aware of it, and some of those misconceptions that whether the discounting will happen basis the credit rating of the seller or the buyer, what are the constraints that are going to be there for discounting. Those questions do come up, and I think there is a lot more that we all can do collectively on making sure that more and more people know about this. I think specific to the question that Chetan had asked about financiers, I do know that most of the large banks are on it. Again, if that 70-80,000 crores got discounted, it was being done mostly by the banks. Most of the large banks are on the platform. They will, of course, continue to be direct businesses because there is a huge variety of types of businesses. All the businesses, not just about invoice payments. There is other lines that both corporates will have, MSMEs will have. Those businesses will continue. But I think there is interest, and if at a particular point of time some financer is either participating in a particular transaction or not, is going to be driven by very many things. So somebody may want to. It could be pricing, it could be credit appetite, it could be liquidity at that point of time, it could be where you want to put your assets given your overall position. But the fact that most large financiers are on the platform and are they committed towards, or they interested in being on it? I think that we are past that stage probably. I think most platform financiers are certainly in it. What more could be done is to, I think for the financiers is probably the easiest thing, right? They understand the value. There are few of them, they understand the value. I think the value propositions for the MSMEs and the buyers is what needs to be probably explained, let's say, more vigorously. And some of those doubts, which especially what the MSMEs have, need to be addressed. And I do hope that there'll be more adoption across all the three platforms so that this number can grow and grow exponentially.
Mr. Gaikwad, would you like to, so awareness is one thing that has come up, and you have also shared how the TReDS platform, all three together have reached around 20-25 MSMEs. Would you like to share a breakup on where the reach has been? And I would also then like to hear perspective from Mr. Narayan and Mr. Mehra on, what do they feel? Is is TReDS only limited to the best of the creamiest of SMBs, or even the smaller ones want to come on the platform?
Yeah. So can I ask? Can I answer some questions of Chetan first? And
Yeah.
take it. So Chetan, the very important perspective, since SMBs and representatives are also there, it's very clear. So look, the apprehensions need not be there for MSMEs, because when you're getting the money, at the end of the day, you don't get money for free, right? So whenever you go to your bank also, when you take a loan, you have to sign an agreement. So let us be very clear that when an MSME also signs an agreement, he's going to get a without recourse payment. And look, what is the agreement state? The agreement states that he is going to assign his receivables in the name of the financiers. So it has to be very clear. So we always explain it to the corporate or the MSME that look, when the agreement is being signed by the MSME, it just that doesn't mean that he's got an invoice by a large corporate buyer. He comes to the platform and he can sell it, because tomorrow at the end of the day, the financier has to be the holder in due course, isn't it? Because he's bought the receivables. He's not discounted it. He's not discounted it with the recourse, but he's discounted it without recourse to the MSME. So when I say without recourse, that means tomorrow in case of default, he will not go. The financier has no right to go to the back to the seller. So be very clear that tomorrow in case the buyer does not make the payment, the financier or the platform does not come over there, but the financier does not go to the supplier asking for the payment, which happens only in the recourse structure. So when you do a non-recourse financing, it is very clear. When you do a non-receivables purchase, it's always required that it's your property, you're selling it to someone else. It's a receivables purchase. When you do a receivables purchase, you have to sign a receivables purchase agreement. So this is a receivables purchase agreement, which is there is very clearly that tomorrow when you sell your receivables, or when the financing is done and you receive your payment, you have handed over those receivables to the third party, which is the financier. So tomorrow the financier will slip into your shoes in case of non-payment from the buyer. He will go and stand in front of him, because tomorrow the buyer should not say, look, why should I be making the payment to you? So that is one thing. Second thing is about the covenants. The covenants are very clear as per the RBI regulations, that tomorrow when you do the financing on the receivables purchase, you should ensure that tomorrow the financing amount, or the amount which is coming to the MSME, should go to the working capital banker, because at the end of the day, there should not be a case of double financing. Tomorrow the MSME loads the invoice on the TReDS platform, gets his finance, and tells you to route it to some other bank. At the same time, he's also derived a drawing power from a particular bank. And that is exactly what RBI is saying, that even for an LC discounting, it's very clear that tomorrow when the bank discounts the proceeds, it has to go to the working capital banker. It's very clear. And that's why even when we do the uploading, or when we onboard the MSME, we are very clear in our mind. RBI is very clear that you have to do the due diligence on that MSME, because at the end of the day, look, there are fraudsters in the system who can come and easily arbitrage the system completely. you know about GST thing happened, right? Where the fraudsters had done frauds to the tune of thousands of crores. So this is something which is foolproof, that you have to ensure that you have to do the KYC, that the MSME exists. You have to do the due diligence to say that there's a valid company which is doing the supplies and not a Coca company over there on the other side. And the third one is that you have to ensure that the receivables are a clear title goods which you're having. So tomorrow when you sell it, you are the clear holder of in due course of that title, and you're passing it to the financier. And the fourth point is about the covenants that you have to credit to the working capital banker. And on the due date, you obviously cannot proceed against the MSME, because at the end of the day it's a non-recourse program. And as far as the charges are concerned, the charges are only financing charges which the MSME has to pay. So let's say today he's waiting for his MSME is there, he's waiting for his invoice for the next 45 days. Can you imagine a scenario where he's waiting for his invoice and he's following up for that? Tomorrow, if a scenario comes where he's getting the payment immediately, you load the invoice on the platform, the buyer accepts it and he gets the payment, isn't it? Which is better. So he can, once the moment he gets his payment faster, or he gets his liquidity faster, he can rotate the money faster, isn't it? And he can grow his business faster. Otherwise, he has to wait, because till he gets his first payment, he cannot start the procurement for the next payment, isn't it? So these are the things which are there already, and secondly, about the compulsory part, look, it doesn't make any sense for making it compulsory, because this platform is meant only for the B2B business. So when you talk about B2B business, it is only about a certain component of the MSME. 6.5 crores are there, but maybe 1 crore are doing B2B business. So it is compulsory over there. But look, again, at the end of the day, the absorption, or the take up rate is also from the MSMEs is very low. When the government started the Udyam portal, the idea is that here is a platform where from Udyog Aadhaar you have to come now to the Udyam portal, register yourself. In Udyog Aadhaar you have registration above 1 crore, I think. I'm not sure about it, but yeah. But when you look at Udyam portal, which has been started new, which gives you a certificate that we have done an analysis of you and you are a MSME now to start doing business, and you can derive the benefits of MSME. The uptake rate is only 25 lakhs. So where are the 75 lakhs disappeared? So this is what the irony is, that you have to follow up with the MSMEs for their benefits. Even in my platform also, we have to explain to the MSME what exactly is TReDS, why should we be doing it, and why it is important for them to do it. Otherwise, they think it's another loan program, it's another credit card, or it's another pesky bank which is calling them. And that's exactly the thing over there. As far as the financing side is concerned, the banks are under no compulsion to come on the platform. That is one thing. But at the same time, when they come on the platform, we see that there is an uptake of the banks to take up the financing, because they have, in fact, as what Sangram said very clearly, we have gone beyond the point of convincing the bankers. The bankers are convinced. They come on the platform. They do the transactions. They have separate trades divisions altogether. The supplier financing divisions are there, and they are looking into trades. Or there are certain PSU banks which have got separate wings altogether, which handle only the trades program. Big banks, all the PSU banks have that particular thing, because there's a focus over there. As far as the exposures are concerned, look, it is all dependent on the rating of the corporate, and it is all dependent on the willingness of the bank to do the transactions, because at the end of the day, this is a bidding platform. So tomorrow you cannot force the bank to do the transactions on the platform, because it's a risk over there. So they analyze their risk. They find that look, I'm fine, I'm safe. If you look at the default rate on the platform, but the 35,000 crores has been done between the three platforms. Hardly 350 crores have been defaulted, and that too 350 crores out of 350 crores, maybe I would say 300 crores have been defaulted on one particular large corporate. Otherwise it's all below 50 crores, 50 to 60 crores between the three platforms. And just imagine, 35,000 crores has been financed, trade transactions, only 50 to 60 crores has been defaulted. So this is what it is. And especially when you talk about the marketing side, look, we have been doing marketing all together. There is a need from the government to do it, because look, we also have our own constraints, because we can't come out with full page ads in papers, because anyways we have to pay a lot for that. So we all depend on doing these webinars through the companies, and through the webinars through the newspapers and all that. And we also do webinars with Piki, CII and all that, to ensure that it reaches the maximum MSME world over there. And that is where we look at papers like Financial Express or all the other ping dailies, to ensure that MSMEs or the TReDS platform, whenever you talk about MSMEs, the TReDS platform also gets a name of prominence, because at the end of the day, this is the best thing to happen, as what Mr. Narayan said, you know. So it's a truth that this is the best thing to happen, and I firmly believe that this particular platform has the potential of changing the way supplier financing happens in India. You know, tomorrow if RBI were to allow even the non-MSMEs to come on the platform, then you have the corporate just coming on this platform and doing the discounting over here by price discovery mechanism. So this is the way. I mean, and this is not replicated in any part of the world. So that's the best part, all thing to happen about it.
See,
Sonal.
thank you, Mr. Gaikwad. See, I appreciate what you've said. The challenges which we are facing as a corporate is basically on account of the current practice which is being followed. See, today, as Mr. Mehra said, that private companies are more focused on paying their suppliers, and we as a corporate ensure that we paid our suppliers on the due dates or before the due date. And when there's a law for the MSME supplier to pay within 45 days, so we try to ensure that part. And currently we procure our LCs we procure our goods on the LC terms as well. So today the MSME supplier is getting a short payment, and now, as you explained, that there are requirements which needs to be done. So there is change which is required, which I feel that the MSME suppliers are not able to do with the current system. When we see as a corporate, yes, as a corporate, see, we talk about the MSME, we talk about a financer. As a corporate, if I see, as a corporate, we are looking for a one-stop solution. So for this platform is for MSME. So for non-MSME, we have to go somewhere else.
Agree.
So this is something which is required. So this needs to be taken up with the regulator for allowing non-MSME supply. Then this platform will become a high. Yes, then you have all vendor bill discounting needs, which is available at one platform. Then the corporates as well as suppliers and everyone will come. And that is, I believe, is the one more reason why the banks are giving a bilateral limits, because for the limits at bilateral level, they will be able to discount both MSME and non-MSME. While on the platform, they will be only able to do MSME. So this is the one thing. Second part, as I mentioned earlier, also the competitive pricing is one thing. Although the pricing is done through bidding process, which is you get the advantage. But in the current system, as I said, when we procure our material in the LC, the costing which comes around 5 to 6%, which is not available on the platform as of now. We have not seen on our part. And further, the funding at this platform is linked to a rating, which is A rated or the above rated corporates are being preferred. So most of the good corporates which are not able to get limits on the platform, despite they are getting a working capital limit from the bankers. And in case they are able to, then the pricing is too far. So these are the challenges from these are the concerns from the corporate sides, I will say, that non-MSME is not there, then your pricing is from the existing system is too far from what we are doing today. So these are the things which are also to be taken care of.
Mr. Singh, would you like to address that? And also, there was this one feedback that, if the buyer has a rating or above and anything below, then the interest also becomes very high from the SMB for the SMBs. So there was also this one query that I had received consistently from some SMB promoters themselves. So would you like to address these two queries?
So if the question is on pricing, yes, pricing does vary by credit rating. Well, that's not a surprise, right? So all the way, it is risk-based pricing all the way, starting from, and not just for this platform in general, starting from sovereign risk to any other kind of risk that you take. But largely the platform, it is expected that what will get discounted on such platforms will be the high-rated corporates. It's not as if other ratings do not get credit access, but that probably requires a deeper understanding. Here, what you're trying to do here in this platform is that it is, in a sense, it is a very light touch model, right? Someone's coming on, looking at the corporate rating and just taking a decision there. For other scenarios, I'm sure the bankers do provide the line, but they do it after understanding the corporate's requirements in much greater depth and understanding their entire working capital needs, and that's how the pricing gets arrived at. So I think I don't think that this should be a hindrance, right? There is see, at the end of the day, the idea is not that there is a switch over from the way of things are being done now to the way the things need to be done in the future. The idea is that there has to be one more option to create liquidity for MSMEs, and they should find it easy to access that option. Like Chetan was saying, there could be scenarios where, where the current way of doing things is cheaper, or it is better in something. Fine. In that case, it will continue to do that, right? So when you go in basis value proposition, that there are scenarios when MSMEs are selling to an extremely high rated corporate, in which case the gap between their own financing rate versus what the rate at which the invoice will get discounted is large enough. Well, they have this option now, which they did not have earlier. And in case it isn't, then it doesn't make sense for them, and they will not do that. Both the parties will continue to do what they're doing. So I don't think the idea is to find a one-size-fit-all solution, which is the only way in which we will do business. The idea is, can we collectively come together and provide one more way, which utilizes some of this opportunity and provides liquidity. So in a nutshell, I think there will always be a difference in pricing because there is a difference in risk.
Mr. Narayan, you have, I think, a point to make. And what do you feel that,
Couple of points to make out there. I mean,
yeah.
When the SME is trying to provide working capital through his books, he's borrowing from the banker at anything above 12, 13, 15, 16%. And if you go and discount a bill of a corporate larger than you, you'll always get better interest rates than that. So if you look at it logically, it's good for the MSME. And once the corporate starts baking it into their policy, they will realize that every time an MSME is giving you a credit for 60 days, he's probably baking in an interest of 1.5% per month. Whereas if he borrows on this platform and he even has to bear the discounting charges, it will be much lesser. So from that perspective, I think, it's, Mr. Chetan has a point that, as a corporate, you have to run around to multiple platforms to handle all of that. And so does an MSME. But, water finds its own level. Right? So I think as an infrastructural piece, it's a phenomenal piece that's been put in. But, like what Mr. Gaikwad said, the will of the government is an extremely important thing. I mean, they created it and left it for people to use it on him. But if you look at the entire Indian business community, it is the community of Jugaad. We always go to the lowest point, find a way to get around things, etc. So, once, I mean, as Picky, we lobbied pretty heavily to the government that, start posting all GST and invoices right into the TReDS. And as a starter, they've at least said that they will start posting the PSU invoices. Even after that, over the last 3-4 months, I'm seeing some changes saying that, suddenly the SMEs seem to be keen to doing government business again, because they seem that they feel that their money will be in a much more predictable flow, etc. Referring to the points that Mr. Mehra said that, earlier, you would give a certificate on the 31st of March saying that I don't owe any MSME any money. Even there, the government is working with the idea saying that I'm no longer interested in that certificate, but I want your bills payment aging, so that I know how many SMEs you have delayed beyond 45 days. I'm not interested that on this day you're not paid anybody. So since then, we see a lot of corporates coming back to MSMEs and saying that how can we, pay you in 45 days, or if we need 75 days, how can we work with you on a program? So all those can be addressed through the TReDS platform. So Mr. Gaikwad, well, the one thing I don't know, it's within your purview or the government's purview, there has to be an automatic acceptance by the corporate of the bill. Because what we are seeing as a trend today is that if an MSME has to be paid in 45 days, the corporates go and accept the bill around the 42nd, 43rd, and 44th day. So what happens to the corporate is that the MSME anyway gets paid only after the 45th day, gets to bear the charges, and the corporate actually lands up getting 90 days of credit, etc. So some of these loopholes, if we can fix, I think we have a good system in place for the MSMEs.
And currently, Mr. Narayan, the way the TReDS platform is designed is basically completely that you have to wait for the buyer's acceptance, because at the end of the day, the buyer's acceptance is required, because tomorrow when the buyer does not pay, the default mechanism starts against the buyer. So that is why it is very clear. So the tomorrow, even in case of performance related issues, the buyer cannot come back and say that there are some performance issues over here. And that is why it is very important that the moment the buyer accepts it, after the payment or after the payment to the MSME, the buyer cannot turn around and say there are some performance issues, there are some reduction issues. So very clearly the TReDS platform guidelines say you have to handle it outside the platform.
I understand that completely, but if you look at the way the MSME does business today, he delivers and gets receipts on the same day, right? If that can be enabled, even if that acceptance is accepted on the TReDS platform, because today what is happening is because of this lacuna of the buyer accepting it, The buyer is at his own free will to accept it whenever he wants. So
But
that
tomorrow, then who will authenticate the invoices?
see today, how does an MSME work? So if he goes and delivers 50 tons of steel to somebody's factory, he gets it receipted, stamped, and etc., and that becomes an accepted invoice. Can't he just submit that to the TReDS platform?
But who will authenticate it? If you're saying that the buyer is not going to accept it, then who will going to accept it? So tomorrow I can construct invoices like that and give it to by thousands over here on the platform. Then you will say that you have drawn some invoices on some large corporate and you please pay me the money.
Very
If the
true.
corporate has not come and accepted or acknowledged it, that these are my invoices I am supposed to pay, there is no way I can find it out. So there is that is the lacuna over here, that since this payment is going to happen without recourse. See, it can happen in a with recourse scenario where tomorrow, in case the payment does not come, we can go against the supplier.
But then his ratings and everything comes into play.
Exactly. So that is the whole thing, because see, look, if the payment has to happen without recourse to the buyer and without recourse to the supplier, and depending on the credit rating, then it has to definitely have an acceptance, because at the end of the day, authentication also happens. At the same time, you also know very clearly that he is accepted it. That means he's taken the obligation upon himself that on the due date, if I do not pay, I can be declared as a defaulter.
Correct. So I think the next big war is pretty much drawn out for CIA and FICCI, etc. I think we need to go there and work with the government and policy in terms of this acceptance, because the minute we are able to make a change there, I think the whole transaction flow will become much easier.
So there is a possibility that tomorrow, look, when the GST and integration happens, and in fact it has come into the parliamentary report also. The Factoring Act was getting amended, so there was a parliamentary committee set up by the parliament, Parliamentary Standing Committee on Finance,
Right.
and headed by Mrs. Sinha. And in that, very clearly, it is written. In fact, they have recommended that there should be an integration between the GSTN platform and the TReDS platform. So the moment the invoices come on the platform, the government can easily track it and come to know that how many invoices have come on the platform, how many have got financed, how many have got rejected, and and they can over a period of time get a valuable data which will very clearly say that, look, this is the acceptance and why have you not accepted, and if you have not accepted, what are the reason. So all those things can come into picture, but yeah, it takes time, because again, the system is evolving, and I'm very happy that, look, there are larger discussions which are happening around that, to see how the inner system can be enabled to ensure that MSMEs can benefit. But again, there is a push also which is required, not only from the TReDS platform, but also from the bodies like FICCI, CII, ASOCAM, everyone.
So this is one key learning that, I'd like to share, what has happened over the last 5, 10, 15 years that I've been dealing with the MSMEs, etc. If you take anything half-baked to them, however good it is for them, that system never goes through. CGT SME is one of the classic things, right? Where the government gave guarantee that if the SMEs does not pay, we'll pay back. But it never took off because the bankers never actually went out and lent. So till you fix the full system, making the SMEs aware is not the biggest challenge that we face today. I think the biggest challenge is to make the transaction flow extremely easy and then induct the MSMEs into it, because the MSMEs, once they touch the iron and feel it's too hot for them to handle, never handle it again, is something that I have seen in my experience.
But we have to make a start somewhere, and I feel that start has been made by TReDS platform, and it's the acceptability, because the proof lies in eating the pudding, because unless you taste it, you cannot say that, look, this is not working. Because that's what I'm saying, that unless you come on the platform, seen how it works, then there is no way you can come to know that how this platform works so seamlessly.
So, sir, the thing I want to say is I work on the platform and I work with some of the largest and most trusted corporates that you're talking about India, and I'm saying the topmost. And all of them follow the same business practice of accepting the invoice on the 45th day. So it's really not of great advantage.
They will be asking you discounts also. They will be asking you discounts also.
Yeah, exactly.
Okay. So that's another way. That's a commercial decision which is taken by the corporate, the MSME saying, okay, fine, give me the payment early and I will give this kind of discount. But that's a corporate decision. But yeah.
It will settle in, at the end of the day, the corporate will realize that the MSME is baking in 1.5% per month. So he'll say that I'll allow you to discount my bill on the TReDS on the side. Therefore, start baking in 1%, 0.5%, and all those negotiations will happen and it'll fall into place.
Okay, can we have any last comments from Mr. Mehra before we move on to the last question?
Yeah, Sonal, I just wanted to have just make 2 or 3 observations here. Mr. Gaikwad had during his response to my questions, he had mentioned two things. I would seek his, in fact, clarification there. Number one, he said that public sector undertakings, they are giving the numbers, or the number of public sector undertakings that are especially CPSEs that are actually on the platform. And he also mentioned that there are few or several CPSEs who actually arm twist their vendors into not insisting on registering on TReDS. Whereas at the other end of the spectrum, in private sector, government has mandated, RBI has mandated that all private companies above 500 crores must register themselves on TReDS platform. Now, suppose there is a company in private sector that, because a vendor of a company would always ask that I want to avail the TReDS platform, and I would be submitting the bill, and you accept it. Now, if that private sector company says above 500 crores that I am not registered and don't you insist on registering, what is the legal recourse that he can take to get this private corporate sector who is reluctant to get to register on TReDS? What is that recourse that he can take? Of course, at the end of the day,
so there is no legal recourse.
There's no legal recourse.
So
that means
customer. So at the end of the day,
just to clarify,
the MSME,
500 crores and even registered, even then you can force your vendor to not put the bill on the platform. So it's not necessary that if you're registered, I can automatically put it. Because you as a large corporate, you will tell me that if you put, next time you put my invoice on the TReDS platform, you stop working for me. And that's what is happening.
So that's what he will lose the customer.
Yeah.
He'll lose the customer. So that settles the issue there. Now, coming to the second thing, Mr. Sangram Singh had actually said, and that holds the key, that TReDS is not a household term at the moment. So here we need to understand, to put things in perspective, that in last year, if you recall, the Honorable MSME Minister had in one of the business channels had actually said that there is 5 trillion rupees of payments that is choked up in government system.
5 lakh
sorry,
5 lakh crore.
5 lakh crores. So that is 5 trillion rupees. And couple of days later, the expenditure secretary came on. Actually, he gave an official release that it's not that amount. It's about 8,000 crores, which we are working. Now, issue is that who was wrong, or both were right. Both were actually right. Neither Honorable Minister was wrong, nor the Secretary was wrong. 8,000 crore that the Secretary spoke about was basically from central government, whereas remaining 4.92 trillion was choked up in state governments. So here there lies the crux of the entire issue, that unless state public sector undertakings and state government departments are somehow, they are legally mandated to come on TReDS platform, it cannot never become a household name, because you can just put things, extrapolate from there, that if a central government has 8,000 crore and there is 4.92 trillion choked up in state government departments or undertakings, so that's the kind of magnitude of problem lying at state levels. Unless this part is actually taken care of, or somehow it is brought on, this platform, and that is where lies the entire, crux of the success. So, with CII, with FICCI, and all other business chambers, and of course all TReDS platforms, they all need to work together and convince the government that somehow state governments need to actually come on TReDS platform. Unless they do it, this would remain this would continue to have very limited success, because then, as you just now quoted the figures, that out of 35,000 crores of business that TReDS has done, it seems that bulk of it is coming from private sector, and a very limited amount is coming from public sector. Whereas the problem that MSME is facing, of course, private is there, but public sector is one area which is having major problem. Unless that part is taken care of and that part is redressed and addressed, things would keep on happening. New and new exotic methods would be, we'll keep on inventing with every passing year, decade. New and new exotic things would keep on evolving, but problems would remain exactly where they were 3 decades ago, and success would be limited. So that's a very small, limited point that I would like to once again highlight, that this TReDS platform right now is limited to public sector enterprises. It's not even open to, or there is no mandatory requirement that central government departments actually get themselves on TReDS platforms. For example, CPWD, Airport Authority of India, National Highway Authority of India. I mean, the bulk of, whole large number of departments move over to state government. Huge number of departments, huge number of public sector enterprises. So that's where lies the real business. And if somehow we are able to unlock that business, then TReDS would become a household name. This kind of convincing will not be required. Just now, as you said, that proof of pudding lies in its eating. Once things go to where the problem lies, there would be, teeming masses who would be willing to actually take up all the pudding that you offer them.
Great. So, Mr. Mehra, you have actually answered the last question also, which was essentially on one big suggestion or takeaway, from this discussion. So maybe we can ask others, and since you also addressed your points to Mr. Gaikwad, he can answer that, and also if he has one last suggestion, because we also need to wrap up quickly.
So my limited point is that, look, the government is making it mandatory. In fact, I have seen that the efforts are on to ask the state governments also to come on the platform. In fact, it is a matter of the state government to take it honestly, because if you were to look at our platform, we already have registered a state government, and the state government came out with its own enterprises or with its own departments they wanted to be there on the platform, and they did the transactions, and they found it very useful to do the transactions on the TReDS platform for that particular COVID period. And they found, and in fact they have gone on record also saying that we were receiving a lot of help on the platform, because they were able to make payment to the MSMEs. So that has to be the will, not only of the state government, or not only of the central government, but at the state government also. But it's a matter of where, it's a government decision to come on the platform. So again, it's a decision where the central government can issue a rule, but they cannot force the state government through a central agency to come on the platform, because it's a matter of the state, regulation, or the state enterprises over there, because it's governed by them. So I feel they can issue the circular, but at the end of the day, it's the state government which has to decide whether to come on the platform or not. But what we are doing in parallel also is, once we were enthused by the government coming on the platform, we have reached out to many state governments. And let me tell you one thing, that many state governments have responded favorably, that they want to go. But it's a bureaucratic matter that, it'll take some time. But once what I'm trying to tell you is that, look, there is a will, which was not there earlier. There is a will from the bureaucrats. There is a will from the government departments. I would not say about the government departments, but I would say at least at the state governments, which are having the MSME divisions, where they're saying that, yes, we want to come on the platform. We find it's useful. So we give us some time. We'll think about it. We'll discuss about it, and we'll come back to you. And this is a matter of the last 4-5 months, which has happened, in the sense we started discussing with one state government. They came on the platform, they discounted the invoices, they found it's very useful. And then we started writing to almost all the state. We have written to almost all the state governments to come on a platform. And we have written, and we are giving the case study of that particular state government and how they have done it, how they have set up the standard operating procedures. You can also do the same thing. So we have received good response. So I feel that, look, I feel happy about the ecosystem being made available. Ecosystem is working towards it. It'll take time, but yeah, it'll work.
Mr. Singh, your last comments or suggestions, if you have any.
I think there's been a great many suggestions that have already come. Nothing left to add now. Thanks.
Mr. Khandelwal.
So I think everybody has spoke about this. From if I summarize, what I have seen is this from all the 3 parties involved. From the MSME, the awareness to be increased, so that MSME agitation should be removed and they should come on the platform. From the corporate point of view, the non-MSME vendors should also be allowed, and I believe the regulator is working on it. Third part, from the banking side or financial side, I will say the bank participation to be increased. Some fixed percentage of business should be done through this platform, and along with the regular reportings to the regulators. I think if these three things will happen, this the platform will have a huge success that what the people have. Thank you.
You have summarized it very beautifully and made my job easier, Mr. Khandelwal. Mr. Narayan, any last words? Yeah, great. Thanks a lot, gentlemen, for this very interesting discussion. We are 15 minutes over time. And thanks a lot again for your time and sharing your perspective. Thank you. Thanks a lot.
Thank you, Sonal. Thank you all.
Thank you, Sonal. Thank you, everyone.
Thank you.
Yeah.
Thank you.
Thanks.
Thank you very much, Sonal, and thank you, everybody.